Value Stack podcast is now sponsored by Coinbeast.com. If you need extra one-on-one time to get your Bitcoin questions answered, book a call with a Bitcoin pro at Coinbeast Connect to get expertise you need with topics ranging from security, privacy, mining, Lightning Network, and more. It's easy to get started. Simply go to Coinbeast.com, click Connect at the top of the page, and book a call with the pro for the topic that you'd like to discuss. So thank you guys at Coinbeast for sponsoring this show, and check them out at Coinbeast.com to get the Bitcoin support you need. Now, on with the show.
It's a little after 5 on the East Coast. That makes it a little after 2 on the West Coast. I'm Shaper Funds, also known as Bo, and I'm here with my esteemed co-host, Zach, and a special guest today, Eric. So I'll let you guys introduce yourself.
Thanks for joining us, Eric. Eric Yakes is the author of The Seventh Property. Why don't you give our listeners a little background, and we'll open it up from there, man.
Yeah, I discovered Bitcoin back in 2015, and it took me a few years to come around from it. I was in the traditional finance world. I came out of private equity, and after studying it for years and initially writing it off as a speculative investment, I eventually came around to the idea that I think it's really going to change the world. And when I got to that point, I decided to write a book on it, and here I am today.
Well, thanks for coming on the podcast, Eric. I think all three of us, we come from a traditional finance background, and I have that similar sort of story as you. I was very dismissive of Bitcoin for a long time. So it was an interesting transition, kind of opening my mind up to it and seeing it for what it actually is. And so it's, and that's kind of like what we do on this podcast is we talk about the traditional finance world a little bit, and we talk about Bitcoin, the differences and stuff. So you're just a perfect guest to have on. And like I said, really appreciate it.
Yeah. Thanks for having me on.
So Eric, let's start with what has you most excited in Bitcoin right now? Like what are you most looking forward to in the next 6 to 12 months?
Oh, that's a complicated one.
Well, it's only going up from here. So
I think that we've got, really a lot of it comes from these geopolitical shifts. And I think that we're witnessing a contraction in trust globally. And that kind of exists across a variety of different dimensions. When you think about what's happening at a geopolitical level, financial level, and economic level, there's a bunch of different ways that people are talking about it. I think a good framework to think about is there's a shift both in real goods as well as in nominal or like monetary goods. And there's this reduction of trust. And when we think about what credit is fundamentally trust. It's trust that has some form of security backing it. One big distinction between the debt of a government, between its domestic citizens and the debt of a government internationally, is that with domestic citizens, it's secured, right? Like there's property rights, there's enforcement that exists. But on an international level, it's only secured by agreement and aggression. So it's very fundamentally different when we think about how debt operates. And debt really, in an international level, kind of operates based on reputation. And then ultimately, if you want to be going to war or if you want to assert your authority in some other form. And as we see this trend in like the contraction of that, I think that is really changing the fundamental dynamics of how international markets work. So there is, if we think about money and we split that between credit and commodity money, our current global financial system is fundamentally a credit-based system. And that's based on trust. And as that trust is reduced, I think we're going to see a much stronger aversion to commodity money. And there's a lot of like geopolitical arguments that you can make for that too. But I think at more of a fundamental level, any sort of contraction in trust makes commodity money more attractive as a form of foreign reserve for different economies. And I think that a lot of people kind of come at this argument from the perspective of, okay, the dollar is dead, or there's going to be this massive implosion of the dollar, and the Chinese yuan is going to take over the world. And I don't think it's necessarily that simple. And I can go into the details of all that, but I think what people should be focusing on is that the dollar is very dominant. It's very entrenched. And even if we do start to have this major shift in trust, it's going to take quite a bit of time for the dollar to ultimately lose dominance. And I think a good example of that is if you look at what happened after World War I with Britain. The US was far and away superior monetarily to Britain, but it took some time before the US was ultimately in a position where it achieved like official global international monetary dominance. So there's a distinction between how good of a store of value the money is within an economy internationally, and also how good it is or how entrenched it is as a medium of exchange and as a unit of account. And as it becomes a worse store of value for a variety of different reasons that could occur, it still is entrenched as a medium of exchange and unit of account, and it takes quite a bit of time to ultimately erode that. So I don't think dollar dominance is really going away anytime in the near future. And when you look at the Chinese renminbi, it's 2.4%, I think, of foreign reserves currently. It's incredibly small. It's not that I don't think that there's going to be a shift in the dollar to the renminbi. I think that will occur. But if we're talking about dominance here, it's a very, very different question. What I do think is very attractive, though, tying this back to Bitcoin, is if you look at foreign exchange reserves, and if you look at these other metrics that we can use to say, okay, how dominant is the dollar and how dominant are its debt assets across the world? You want to look at foreign exchange reserves. You want to look at how debt contracts are being denominated in the dollar. You want to look at how, foreign transactions are being denominated, and then ultimately the level of volume of trade globally that occurs within any particular sovereign currency, because that determines its liquidity. So if you are a, foreign central bank and you're considering adopting something as a foreign exchange reserve, then, you're going to look at certain metrics like, okay, how liquid is this? How stable is it? How much yield can I get from it? And those are kind of like the three ways that I think, global monetary authorities are thinking about it right now. And that I'll add two more points, I guess. When we think about this shift, though, I think a huge shift that's occurring is that when we had the economic sanctions be implemented on Russia, that signal to the world that we have, that the dollar, which is supposed to be a risk-free reserve asset, is no longer risk-free. It is confiscatable. So all the different monetary authorities around the world right now are asking themselves, what type of money are we using and what type of infrastructure is it on? So they're going to probably be opting into allocations that are based on assets that, aren't as confiscatable as a dollar would be, or at least they can reduce that risk in some sort of form. And I think if you think about that idea, then the major economies that will likely be taking more risks in that direction are probably the smaller, more emerging economies. If you look at a lot of the data with foreign exchange reserves and transactions, things are becoming a lot more dispersed. So, for example, foreign exchange reserves, dollar and dollar denominated assets, they comprised, it was around like 73% back in 2000, and now that's declined to 60%. So, or it was 71% in 2000. So that's declined about 11% now. And that's a major decline over 2 decades. But what we see is that difference where all of it's coming from is much less these major economies like the euro in a lot of these very small denominations of, emerging market economies or smaller economies or non-advanced economies. And we're seeing this, loss and dominance of the dollar, and then this growth in a lot of the smaller economies. So when I think about those smaller economies and what this whole situation is signaling to them, I think it's telling them you want to have commodity money. You don't want to trust in the dollar as much. We have a contraction in the reputation of, these governments, and we don't want to be dependent upon their financial infrastructure either. And I think that makes a strong case for Bitcoin, but I also think that it makes a strong case for gold. Right. And I think that gold will be the ultimate winner out of all of it, which, if we were to, if you look at that, so, if you have China, Russia, and then a lot of these smaller economies, their foreign exchange reserves are around 12.5 trillion. And that's, out of a total of 16.5 trillion in total foreign exchange reserves. So it's a very large percentage of that, of the market. And when you think about what they're going to be interested in, they might have a large shift to gold, but it's a very large market size. So even smaller allocations where they're saying, okay, we want gold, but gold does have certain disadvantages to Bitcoin. It doesn't operate on permissionless infrastructure. And you can expect greater capital appreciation in the long run from Bitcoin. Whether or not the authorities have actually gotten there, I'm not certain. Mm-hmm. But I think that ultimately, if we were to say that out of all these economies, they were going to have, they're going to take, say, 25% of their reserves and they're going to put them out of fiat denominated assets, then I'd say a large majority of that goes into gold, but a large chunk of that I think also could go into Bitcoin. And that's probably what I'm most excited about. I think obviously with what I'm describing, this is a very, very big change. And I think a lot of bad things can come from it. So it's not that I'm necessarily excited about those things, but in terms of the nature of Bitcoin, I think that that's going to be a primary shift benefiting Bitcoin over the next, 5 to 10 years.
So do you view Bitcoin as a commodity money in that case, like with gold? Do you categorize it there? And having read your book and talking about like the different properties of money, would you say that like reputation or like ingrained into the economy, like how entrenched it is maybe another property of money that maybe isn't like a defining characteristic, but one that affects its permeation within an economy?
Yeah, I'd say like how entrenched something is, that's ultimately making it a medium of exchange and a unit of account. And I'd say on the commodity side, Bitcoin can be thought of in a lot of different dimensions. So we're talking about Bitcoin as a form of money right now as a reserve asset, but it's also payment infrastructure as well. And it's also, an immutable record for asset movement. There's a lot of different ways that you could think about Bitcoin, but like categorizing it, if we're talking just about commodity money, yeah, I think that Bitcoin falls under that. It functions like a commodity. It was structured and designed in a very similar way, just to be ultimately superior.
So given that, do you think that if China or like you said, the smaller countries it may be easier for them to do that? So do you think that countries like El Salvador, for example, that's why they're moving quicker and being the first to adopt here, because they are that like smaller developing country that has the lever to actually pull?
Yeah, that's an interesting point. I think in El Salvador's case, it's kind of a little bit, I'd say that's, it's not that I don't think countries like El Salvador are considering that. But I'd say in their specific case, it's kind of a different play, because their incentives were a little bit different for the adoption that they had at the time that they did. So El Salvador brought in this, new reserve asset and mandated as legal tender. And they're an incredibly small economy, and, they're ridden with debt from the IMF. And they're obviously subject to these same constraints. But honestly, my take on El Salvador is you have a dictator who is looking to really gamble. And yeah. I think that what he sees is that if he sees value in Bitcoin, and he has a really strong incentive to want the assets of his economy to grow with it. And that would be something you could qualify as like an incentive for foreign exchange reserve type leaders and what they would be thinking. But also, I think that what was particular to El Salvador is the fact that they're the first mover. And what's really attractive to them about being the first mover is that if they think that they can get ahead of this quickly enough, I think El Salvador's GDP was something like 13 billion or something. It's like a company effectively. And, if you're the first mover, then you can attract a lot of capital to your country. Mm-hmm. So I think their goal was to attract a lot of capital ultimately. And I think the majority of the benefits that they're going to achieve is probably going to be beyond just Bitcoin appreciation. But I think in, the next few years that we'll probably see the GDP of El Salvador double. It doesn't really take all that much to really move a lot of capital that could change their economy quickly, which would be good. That'll signal to the world like, okay, this is working for them. Why don't we do this?
Right. It's like a growth experiment.
Right. Yeah.
Yeah. You said something interesting a minute ago. You were mentioning Bitcoin is like the global unit of account, and those things, it can't just be undone very quickly. My question is kind of in the opposite direction, but as something is becoming the medium of exchange and unit of account, how do you see the volatility decreasing? And I'm specifically talking about Bitcoin here. How do you see Bitcoin's volatility decreasing over time? Do you think like percentage of the population that uses it? Like what's your framework for thinking about that?
Interesting. That's a good question. It's really complicated. I'd say, because, if I'd say anything that is really what drives quite a bit of volatility, like the primary driver of volatility in things like commodities is leverage. And when we can maintain stability in certain commodities over time, it's really when, so a good way to talk about this, I guess, would be what's happening in the current commodity markets. So there's this guy Zoltan Pozsar from Credit Suisse, who's like, big leading authority on global banking system and one of their most forward writers, gets a lot of press, really, really bright guy. And he's been releasing all these papers recently about his take on what's happening in the global markets and how the monetary regime is fundamentally shifting. And one of the ideas from what he's been writing about is that this is kind of separate. He's talking about things more broadly, but I'm just going to focus on one part. So there is, when we had the commodities in Russia get sanctioned. So when Russia in general got sanctioned, we kind of created this bifurcation in global commodities. So we said that there's this whole group of commodities now that are bad. These are, and if you're thinking about this compared to like a crisis that occurred in 2008, those are like subprime commodities now. You can't buy them, and they decline rapidly in value because their demand dropped off very quickly. And then we saw a spike on all the remaining commodities that aren't subprime because now their supply is cut. So then we see this huge spike in another set of commodities. Now we have these two different sets of commodities and very large price volatility. Mm-hmm. And a lot of that's just because of the amount of leverage that's in the system. Well, obviously what I fundamentally described. And then when you pair that with the amount of leverage that's in the system, that creates more volatility. And what he was arguing for is that, a lot of people, regardless of which way the price moves on either of these commodities, you have people who are speculating on both sides of its price. So regardless of which way the price moves, you're going to get margin called in some sort of way. And the argument that he was making is that he doesn't think risk monitors within, just like federal agencies had been tracking this market to the same degree that they've been tracking the banking system since 2008. And he sees a lot of risk in that potentially, if you were to have a commodity trading group default from some of these large swings where they get margin called and they don't have the capital to put up for it, then what happens to the exchanges who are doing all of this? And we'll discuss some sort of systemic collapse in that area. And I don't follow that market enough to really know, but I think that type of thinking is a really good example to see how volatile some of these markets can happen from certain shifts. But going back to your point, I think what's going to make Bitcoin less volatile is number one, when we had, the perpetual swap market, which kind of drives a lot of, is like fundamentally what drives, Bitcoin and a lot of these cryptocurrencies. That market is unique. So BitMEX created that, and it was like 2016 or something. So perpetual swaps are very unique to that, and that's where a lot of this like 100x leverage started coming from, and that introduced quite a bit of volatility and leverage into the system. And I think that as Bitcoin matures, that leverage is probably going to decline, and we should see less volatility in Bitcoin when you think about it from the perspective of it being a store of value. And then as contracts become more denominated in it, it's kind of like circular thinking. But I think that the bigger it gets and the more entrenched it gets and the more sophisticated its capital markets get, that its volatility should decrease over time. That being said, it is still fundamentally a commodity. And I think that the one thing in like Bitcoin world that some people get a little bit ahead of their skis on this point is that, something that functions as a store of value is inherently you're trading volatility for stability. Whereas if we want perfect stability, then you want a system that's ultimately backstopping demand with supply so that it maintains a stable price. And the cost of that is, increasing inflation over time. But ideally, we want money that's both. We want a stable currency that stores value as well. Mm-hmm. So I think that when you think about stability and all of this, there's still going to be a role that, whether it's, payment infrastructure on Lightning through stable USD, or whether it's stable coins, there is still going to be a role for these credit markets as things grow, as people want stability. I mean, if you go to international economies, so here's one way I think about that. I was just making a big argument for foreign exchange reserves and why I think Bitcoin would get adopted for that. And that's because the thinkers at, the leaders of like a central bank are much more long-term thinking. So they have the luxury of being able to say, we can put a 2% allocation of our reserve assets into Bitcoin and we can suffer through the volatility. That's not a problem for us. But when people in foreign countries are like, okay, I want to take advantage of these disintermediated, blockchain payment rails, they're not necessarily going to Bitcoin because of how volatile it is. And they're like, okay, and we could talk, talking about fiat money is a separate argument, but like for people who are thinking much more short term and they just want access to something like the dollar that's much better than whatever their native currency is, then they want something that's stable like the dollar, and they want to be able to move that over a disintermediated payment rail. And that's kind of the benefit of a lot of the stablecoin infrastructure internationally, is that it provides people that access and it provides people that efficiency of transaction too. So and when I say stablecoin, I just mean any sort of stable asset that you can move within this ecosystem. So whether or not that's Lightning, or whether or not it's one of these altcoins, or whatever it is, that's something that people who aren't, speculating on the future of money get real utility out of. And so I think that those two things are probably going to be growing in tandem pretty significantly. And Bitcoin doesn't necessarily solve the stability problem. And even if we live in a hyper Bitcoinized world, I don't know. I can't really say, but I think if you look at assets throughout history, there's going to be some proportion of credit that still exists. Like our global monetary system has expanded its proportion of credit well beyond what it would naturally be. But even if Bitcoin is the dominant world reserve asset and we have all the infrastructure set up on it, credit is still a necessary function within an economy. So what that natural, I'd like to believe that it'll become a natural proportion determined by private markets. But whatever that natural proportion is, I don't really know, but I think it'll be quite a bit less than what we're seeing today. That'll be a mechanism by which people can enable stability.
Yeah. I've wondered too about like the sustainability of credit, like in a Bitcoin economy, when you've got an appreciating asset, rather like if you're denominated in Bitcoin, right? Something that's appreciating or deflationary rather than depreciating. Right. But I share that. And I think Hal Finney talked about this too in the early posts where, there'll be different like central banks and different levels of fractionally reserved coins that will issue and use Bitcoin as its kind of commodity money, similar to the gold standard.
Yeah.
And I want to shift gears a bit and ask you what you think about, we're talking about like leverage and the need for stable payment rails for those that aren't like don't use the dollar. Like, what do you think about, like, so Elizabeth Warren says something about CBDCs today. I mean, do you think but then at the same time, Ted Cruz is trying to put in laws to prevent the government from issuing CBDCs directly to citizens. So I'm curious to hear like what you think on just generally on CBDCs. Do you think there's a place? Do they compete with Bitcoin? Can they coexist?
Yeah. So what I pray to God for is that those things never see the light of day. But it's it's going to be that's going to be a huge piece of all this. So yeah, to your point on Hal Finney's comment about a free banking system, that's based on a lot of the work and theory of George Selgin, and he wrote this book, The Theory of Money and Free Banking, I think is what the title was. But he he theorized, and that was back in like the 80s, I think, how a system of money can actually work, not from a top-down perspective, and how private issuers of debt and functioning market feedback mechanisms, aka pricing mechanisms, as long as it's free and open, and people, when banks fail, they fail, and we don't manipulate these price mechanisms, then we can create a very functioning economy through privately issued debt. And that's exactly what I think is going to happen. And I think that what we're seeing is stable coins are that replication within this world, and then, so once again, the question of whether or not that is something that is, has a coin and it exists on Ethereum or, whatever it is, that's a completely separate debate. That's much more complicated, but just talking at a high level about the theory behind it, I think that what I ideally envision is that, the Lightning Network grows out, and we can be sending transactions, and people can also be utilizing smart contracts to form structured credit contracts on the Lightning Network, and we can have our own forms of like stable coins being issued on that. And then we can have ultimately like a private free banking system, which is effectively what it is. I mean, the problem with like the stablecoin market right now is like eventually things like Tether are probably going to get regulated as banks. And and I think that'll be like one of the key limiting factors. But on the CBD side of things, it's a surveillance tool. It would be horrible if we ever had something like that created. And I hope that things spread fast enough to where, governments lose enough power and there's enough populist movement behind all of this to where, because at the end of the day, politicians are whores, right? And if we can get like a critical mass and get the median voter within a society to support Bitcoin or a free private group of stable coins enough, in spite of all the propaganda that they're going to be pushing, then I think we could ultimately conquer CBDCs. But I guess we'll find out. And then a lot of that's going to also be stemming from how competitive it becomes in other foreign markets and how much capital flight goes to foreign markets. That'll be another key constraint of politicians. So I guess how I just decided to think about it is I think domestically, if we get enough critical mass with the median voter, that politicians might start moving away from some of that narrative, but we're already pretty far along on it. So, we'll see. I don't know if we're going to get there in time, but at least internationally, if they do attempt to implement a system like that and the US gets enough capital flight, they might renege on promises like that. But time will tell, man. I'm not an expert on topics like that, so it's really hard to say.
So do you think that one thing that really stood out was we talked about like hitting critical mass quick enough. Do you think so Jared Polis, governor of Colorado, was at ETH Denver, right? He's talking about accepting crypto for tax payments. So my question in response to that is, do you think that altcoins are on the same team, or are they actually like competing against Bitcoin and taking away from its possible success because it's making that critical mass happen slower than it otherwise would?
Yeah. What I think is that it's just too broad of a question to answer, right? So like there's this whole universe of other things other than Bitcoin, and most of it is just a bunch of scams. And then there are some people attempting legitimate projects, which everybody right now in the market is speculating on whether those will or will not fail. And are these things like against Bitcoin? I guess when I think about that question, I don't know. It depends on what you mean by against Bitcoin, but there is against Bitcoin in terms of it's going to hurt it from a regulatory perspective, or against Bitcoin in terms
Does
of
it make it less likely to succeed?
yeah, I think that all of these things can hinder its ability to succeed in the short term. It can draw capital into other areas, but I think fundamentally, when we're talking, Bitcoin is like the only asset that's uniquely distinct from this entire market. It's not even, it shouldn't be under the same veil as this market.
Right.
So it's immutable. It's at nearly a scale where all these crazy theoretical arguments for how it could even be shut down are, nearly impossible at this point. The amount of like sovereign organization that it would require to like actually do some sort of attack on the Bitcoin network, that's hard. So really, it's just, can they regulate the system itself, its surrounding ecosystem, and control that? And will they be able to do that when they're subject to a competitive global environment? And so I'm not really like worried about altcoins competing with Bitcoin ever. But what I think is, I guess there's two other points I'd make about how they could, effectively be against Bitcoin. If enough of some of these, effectively centralized altcoins are, if enough of them, if they could be effectively like adopted by a government in some form. So if a government were to, we'll give you an example. So like Ethereum's like, we're going to switch to proof of stake, and all of our ecosystem is completely dependent upon settlement and Tether, and Tether is a centralized company. And the US government goes to Tether and they say, okay, Tether, we are either going to shut you guys down, or we want you guys to help us. And they say, okay, what do we got to do? And Ethereum, and they say, okay, well, look, you guys are controlling all this volume of settlement on Ethereum. Whatever Ethereum chooses to do with its code, and whichever way it chooses to fork, and it hard forks all the time. So whichever way it chooses to hard fork, you guys ultimately have the final say in that. So if Ethereum wants to do a hard fork tomorrow, and Tether says, because tethers can't exist on both chains because they're backed by one set of collateral. You can't duplicate the collateral backing it. So Tether has to pick a chain, and Tether could effectively just say, nah, we don't want to go with your hard fork. And that means that none of your DeFi is going to work anymore. So that would be an example of how I think that regulators could come and they would say, okay, well, what if you guys do your little proof of stake switch and you give the government some sort of like backdoor, or we get some sort of, control over the protocol, blah, blah, blah. And then I think when you think about the incentives of people that I hear on that side of the industry, I think that situation seems somewhat plausible, in which case I think a good attack vector for governments would be to, ultimately bring crypto into the sphere as a wolf in sheep's clothing, convince people in Ethereum. Yeah. And yeah, so I could see that as like one hypothetical scenario. One thing that I think really that kind of back to that point on stablecoins is stablecoins continue to emerge in this ecosystem, that's going to attract, I think, a ton of capital, and that increases volume. That makes Bitcoin so if you think about it this way, if people are like, okay, we're going to all move our assets into this new digital system, and I need a store of value and I need a medium of exchange, and a lot of people start moving money in for a medium of exchange, guess what they're going to start using as their store of value. And that's kind of how I think a way of like, capital into the crypto world could really benefit Bitcoin.
What do you think about that benefiting the dollar? Like, do you think, as we see like people in Turkey and Venezuela and different places using Tether, in an indirect way, it's like sort of increasing demand for the dollar. Do you think politicians could start to see it that way?
And that's another trade-off. So yeah, it totally is. And there's so many dimensions that you can have this conversation across, but because there's so many different conflicting incentives, right? I don't want to use fiat money. I don't want to use something volatile. Well, you're kind of like, people are getting forced into one side or the other in some form. So yeah, it's effectively entrenching the dollar within this new ecosystem in some form. That being said, we need to bridge the gap in some sort of way. And look, I don't know enough about how some of these algorithmic stablecoin ideas work, and I know that people have been trying to work on this idea for a very long time, and we have no idea if it's going to be successful or not. But I think in like if we're talking like futuristic, very long term, um, look, if there is a way to have measurable economic indicators, and in this particular system, I think that there's going to be a lot more of them. Then there's ultimately going to be a way to automize some form of like central banking decision making, and then whether or not that works or fails is another question. But if you're trying to create like an algorithmic stablecoin, then you could probably make something where it's like you're not trusting in the decisions of a specific fiat entity. You're trusting in an algorithm that backstops supply during credit contractions, in which case that is something that will inflate over time, but it's probably better than the subjective control of 7 white dudes. And so I think that could be an option. But to answer your question, I think it's definitely like entrenching the dollar in the system a bit, which is more, well, I don't know if I'd actually frame it as entrenching, just because it's more capturing how entrenched the dollar already is within the system. That's probably a better way of thinking about it.
Right.
One more question I have before we change gears and talk about your book. I know Bo wants to know, do you think the Fed will still exist in 10 years, like in the state today?
I don't think it'll exist in the state today. I think the Fed's probably going to change pretty drastically. I think the big question is do they attempt to adopt Bitcoin as a reserve? And kind of going back to my points about this reversion towards commodity money that we're seeing globally, and whether or not the Fed ultimately starts opting into more reserve commodity like reserve assets from that, that'll probably be a big impactor in the most immediate term. So, I mean, the U.S. is already, like, if the U.S. said, okay, we want to go back on a gold standard, the U.S. is in a really good position. They own the most gold. I think we actually, as a percentage, if you took the amount of gold the U.S. has, I think it's around like 66% of the total amount of foreign exchange reserves that we hold. So we are actually in a pretty good spot for that. But as Bitcoin continues to grow, I think that they'll be posed with a decision of whether or not to adopt it. I think that what's ultimately going to happen is if we do get enough, if we reach escape velocity in this industry, then and we do get a private system of credit emerging, I would see the Fed probably move to more of an administrative role. So like if we were to peer 30 years into the future, then I think we could potentially see something where we have this private system of banks and the Fed is like an overarching administrator, and like watchdog of that system. So like I think, and that'll be one of the key limiting factors in what will be used to justify that type of a shift. Will be these wildcat banking systems that had emerged between the second bank of the United States, which was the central bank that existed before the Fed. And then we had like a long period of just private, somewhat free banking. It was like the state banking system. It wasn't necessarily like a completely private free banking system, but it was a much more decentralized than how the Federal Reserve works today. And there were a lot of like credit contractions that came from that. And I think those will be big arguments to be used, that we need a watchdog and all that. I think what's fundamentally different from back then is that it was way long ago, and we didn't have things like the internet. We didn't have public blockchains to audit reserves. We didn't have things that ultimately increased information transparency within the economy. So I think that the idea of like a private system today is a lot more viable. And but nonetheless, I think that period of history is definitely going to be used as some sort of ammunition for regulators to take hold of it in some form. And I could definitely see the Federal Reserve probably being decreased to a role similar to something like that.
Right. Yeah. There's a there's never any government agencies and laws, they don't go away. They just get repurposed.
Yeah. Right.
Well, let's talk about your book. So you wrote The Seventh Property. For those who haven't read it, it's my favorite Bitcoin book. Eric, I've told you that probably 200 times at this point. I've been shilling it since the very beginning, before you got big and famous on us. But so I think when we first met, we met at like a Bitcoin meetup, and you were telling me that you had a book coming out, and I was like, oh yeah, like met this dude at a Bitcoin meetup, buy my book, like
me too, man.
Yeah, like when you go to these Bitcoin events, like everybody shills everything, right? And so
right, yeah.
But then you gave it to me, and I read it, and I was like, whoa, dude! Immediately, I knew that this book was gonna take off, and boy, did it. I've seen a lot of people compare your book to Saifedean's The Bitcoin Standard. I personally prefer it. I think it's a bit easier to read and not quite as opinionated. So, but I'm curious, like in your own words, like how would you? Well, actually, first, how did you get the idea to write? And you may have covered this already, but in a different podcast, like how did you get the idea to write a book? And at what point did you say, "The hell with it! I'm going to leave my cushy, good-paying job in private equity and live in my mom's basement and write a book"? Like, at what point were you like, "This is a good idea"?
So it definitely, I wasn't planning on writing a book when I made all those decisions to leave my job. Like I had been, when I was like a freshman in college, it's like, okay, I want to work in PE, and I worked very hard to get there. And it was a long path, and I invested a lot of time into that path. And it took me a while to really come around just to the idea of quitting PE. So it was more of like a personal journey. And I wasn't really sure what I was going to do exactly when I quit. I had some like vague high level ideas. I had some direction, but I wasn't like, okay, I'm going to write a book, and then I'm going to start, spending a lot of time on Twitter, and then I'm going to start a company. Like that wasn't part of my plan necessarily. At a high level, how I thought about it was, I kind of had gotten to this point in my career where I was like, okay, is this what you want to do? And I kind of just had like, there's like this really long period where I was grinding for a long time on a bunch of different deals, and asked myself, I was like, okay, you're working very, very hard. You're sacrificing your social life. You're sacrificing your health, all these different things. Like, is this really what you want to do? And then, my subconscious was kind of like, no. And I was like, oh shit, like what am I going to do? So I started like digging deep into that over the next few months. And I don't know, I just started asking myself questions. Like I'd say for like listeners, like the three big things that I ultimately got to about how I really thought about it was, what am I good at? What do I enjoy doing? And what does the world want? And I tried to look at how those three things didn't really overlap with what I was currently doing. So when I was like, what am I good at? And I was like, okay, there's a lot of stuff in this job I'm good at. There's other things that I'm good at that I don't really use at all in this job and aren't really rewarded in this career path. So that's like, play to your strengths type thing. And I was kind of like, okay, what do I enjoy? And I was like, a lot of those things that I'm not really doing in this job, I really enjoy. And I have to like get those from other areas of my life. What if I could pair that with what I'm doing? And a lot of that was just like, what we're doing right now, just like being open, talking like dudes, having a conversation, saying what you really think. When you're always in this corporate professional environment, you don't really have that. And then having like the media aspect of all of it was really attractive to me. I wanted to have a following. I wanted to tell a story to the world. I wanted to just like, be genuine with people and be funny and not have to worry about being super professional all the time, things like that. And so, like the very first idea, like it's funny how these things like evolve over time, but like the very first idea when I was going through that thought process that went through my head, it wasn't like what I'm doing now. It was like, I could be a comedian. Like that would be hilarious. And like that'd be a good time. I can like, drink and like go on tours and like say shit all the time. And that sounded fun. And that's kind of like, that was step one. That's where I started. I was like, that sounds awesome. And then I started digging deeper into that. And I was like, okay, I don't want to just like be some dude who tells jokes all the time. I want more than that. Like I'm really interested in these intellectual conversations. All these topics, like I spent a lot of my free time just reading about the economy and what's going on. I spent a lot of it reading about Bitcoin. And then I kind of got to a point where I was like, okay, I could probably tie a lot of that stuff together and maybe, in some sort of way. And I wasn't like, once again, it wasn't like the path that I went wasn't really in my head. It was just more like, okay, I could do something like that. And then, I got to a point in my job where I was like, okay, I was definitely getting, once I started having these ideas flowing through my head, I was just like, okay, I'm really not happy working anymore. I really just want to focus on this. So I ran the numbers and I was like, okay, if I sell my place, I could probably give myself a few years runway. And then, me and mom got lunch one day and I was like, what do you think? And she was just like, let's do it. And I was like, all right. So I did, and I sold my place and I quit my job. And then, honestly, like, just like personal advice, like being able to move home in your late 20s, especially as like I've watched my parents get older, has been like a really rewarding experience, because I feel like a lot of my friends and stuff, they don't see their parents as often anymore. And it's good. It's good being able to like be a full adult and spend a lot of time with your parents. But yeah, so I made the move, and then really I took like 3 months off and just started like got myself back into shape, and started reconnecting with a bunch of people I lost touch with over the years. And then I started getting to work. And the first thing was like, okay, it was like this big insurmountable wall. And I was like, I don't know how to do any of the stuff I'm thinking about doing. What do I need to learn? And the first thing I was kind of like, okay, well, really at the crux of all this is Bitcoin. I can definitely just get super deep into that. And I was like, okay, that's something I know I can do that won't be wasted time. So I was like, that's step one. And then I just like had to put together kind of a curriculum for myself. So I read a bunch of different stuff, and I had no tech background at all. So I, had to teach myself Python, because when I was working PE, it's like, if I'm going to understand a company that we're considering about buying, then I, got to get as deep as I can. And I got to model out every aspect of the company and, determine all these valuations and things like that. So I was like, I was applying that logic to Bitcoin. I was like, how do I get as deep as I can in Bitcoin? And then I discovered Jimmy Song's Programming Bitcoin book. I was like, okay, if I could actually get through that book, then I probably understand how the code works and I know what's going on under the hood. So I was like, shit, I got to learn Python. And so I was like, all right, let's learn Python. And that actually wasn't all that hard. It was like a beginner level. I don't like know how to do Python. I just got like a beginner level understanding. It's not too hard. And then enough to be able to get through his book. And then there's a bunch of other stuff I read into economics, finance, a bunch of different Bitcoin books, Mastering Bitcoin, obviously Bitcoin Standard. I haven't read a lot of Bitcoin books, to be honest. Bitcoin Standard, I think, was the only one I'd really read before I wrote my book. And
so let's hash on that. So how would you compare the seventh property to the Bitcoin Standard, for those who have read both, and then maybe for those who've read neither?
I have
or one or the other.
Yeah.
So, okay. Because Bitcoin Standard was like the book that I think people in finance would be giving out to one another back then. And I was like, okay, I think Bitcoin Standard does really well for like hardcore Bitcoin advocates. For people who are skeptical investors, I don't think it has the same punch. And I was like, okay, well, so I had a lot of people that I used to work with in mind who were like very skeptical of Bitcoin when I was writing it. And I was like, okay, I was thinking of the smartest people who are well-informed, who don't have like a proclivity for tinfoil hat type thinking. And I was like, okay, how can I sell that type of demographic? And that's what I was doing a lot in my writing. So like one of the big things I said is like, everything I'm going to do, I'm going to ensure is very, very fact-based. And not only that, but I'm going to make sure that my sources aren't just all from a bunch of like Austrian economists or, all these people. So a lot of my banking history is just sourced directly from the Federal Reserve papers. And I try to do that often whenever I'm making arguments in favor of this industry, is I try to source my information from people on the other side, because then it's a lot harder to argue against. So that was one of the things, is I wanted to take a very measured approach, and I didn't want to start reading into a bunch of things. I didn't want to get too theoretical with anything. I think the Bitcoin, when he talks about time preference, how this affects society, all those things, it's like, yeah, I don't know, maybe, man, like philosophy is fun, but it's not something that investors really care about. And,
right.
so I wanted very like tangible arguments that are sourced from information that isn't part of this, like an echo chamber of some form of groupthink. And so that was a big part of it. And also just it's very hard to make arguments for Bitcoin just based on money. You can't just understand money. You have to understand the whole banking system. And now those two things are very, very tied, obviously, and money is effectively created through the banking system. So it's like, that is a very important topic to cover. And that was one of the other big distinctions that I was like, people need to have at least like a baseline framework of thinking about what's going on in the banking system and how money actually gets created. People don't really care about economic theory and different economists and their differences between one another. I think that obviously there's a market for that, but a lot of people in the finance world don't really care about that. They're more just like, okay, what are the facts and how does the system actually operate? So that was another big thing, was getting into the big pieces around having, I'd say a quarter of the book covers banking, maybe more. And then, probably more. And then, so the first half of the book's money and banking. And then the second half, once you understand that, you understand the problem that Bitcoin solves. And then I got into Bitcoin. And then that was the other thing too, is from what I had read back then, I was like, okay, Bitcoin Standard doesn't really get very deep at all into Bitcoin. Mastering Bitcoin gets deep, but it's also very broad. So you have to read like a lot. And for financial people, they're probably not as concerned. There's a difference between people who are like, I want to throw my life into this and be self-sovereign, or people who are like, I want to consider investing in this. And for people who are like, I might consider investing this, like, for example, consider your classic like capital allocator, like a high net worth type person. They might get keys, but they'll probably have like a financial advisor who runs all of their things. They don't have the time to really concern themselves with this. And only if it's some like major critical decision of theirs and they want to have a huge fail safe, they do something like that. But a lot of their decisions are just being done more at an institutional level. So when you think about that type of person, you don't need to get into a ton of distinctions around here's how a hierarchical deterministic wallet works. For them, it's like, we need to understand how the network works. We need to understand how the incentives work. And we need to understand how that's going to be enabled by an ecosystem so that it, fulfills all these functions. And like getting into all that, I think are like, it's kind of the core information for financial people who really understand to like get Bitcoin and be passionate about what it's going to do and feel a lot of conviction in it. So I got technical within those specific areas. And I saw this big gap because when I read about those specific areas, I was like, okay, mastering Bitcoin gets kind of deep, but it doesn't get as deep in some areas that I thought it could. And really, I got some of that from like Jimmy Song's Programming Bitcoin. And I was like, I didn't need to learn Python to get this stuff. So I can summarize a lot of this information into my technical overviews. And that was pretty much the logic on all of that. And then at the end of the book, I was just like, okay, nobody talks about Bitcoin governance really in any of the books. And because that was one of the big questions I had. I remember jumping into all of this is I actually had no idea how the developers worked. I had no idea how, the ultimate governance structure worked at all, and what the regulatory environment was like. So I was like, okay, people need to get like a high level understanding about how all that's structured, and ultimately like how, not just on the network level, but at the, cultural, what would you call it? Like the real world level of people, and how that whole governance structure is set up, and how those people ultimately achieve consensus, which is implemented at the network level. That was another big thing I wanted to get into. And then at the end, I just wanted to go through all the criticisms and say like, look, there's a lot of criticisms of Bitcoin. Most of them are because people don't understand how it works. And then of the ones that are like legitimate criticisms, I think that there are other things that we'll see in the long run. I think a big one that's like that is, will the volatility decrease if it gets 10 times its size, for example? It's like, we'll have to see if I think it will continue to decrease, but will it decrease enough? I don't know. And then there's some, but it's like, that's not going to destroy Bitcoin. It just means it may not expand into different markets. It doesn't mean it's over. And then, there's nothing that was like a major criticism of Bitcoin is something that I think is ultimately going to destroy its fundamental value. And then when you tie all those criticisms together, and even if you consider the legitimate ones, you say, okay, well, every
asset, every investment has legitimate criticisms. Like all of these things are speculative in some sort of form. There's a lot of things that could go wrong with Apple. But it doesn't mean that its risk to reward isn't just absolutely spectacular. And that's how I tie it out at the end. I'm just like, if there's no better risk to reward investment that you could possibly make.
Yeah. Absolutely agree with that. Do you feel that there's at what point we're all about the same age. Like at what point do you think in our lives the opportunity cost of spending Bitcoin is not so severe? Is it 10 years out, 20 years out?
I don't know. It's it's like, okay, at what point are people going to be spending Bitcoin to buy? It depends on obviously what they're spending.
Let me ask a different way then. Instead of timeline, because that's kind of hard. It's really, time is contingent on other things. So do you think it's at like 80% adoption, or I think it's further than that?
Yeah, I'd say, okay. I'd say that Bitcoin, I'd say people are going, well, look, at the end of the day, it's like, I think Bitcoin will mostly emerge as an asset that people are predominantly spending it for other assets on. I don't think it's going to be something that, even though the efficiencies of transaction will be enabled by like the Lightning Network, it's not going to be, I'm not going to say not going to be, it's people are going to be more focused on holding their Bitcoin. So generally speaking, so if let's say the Bitcoin market reaches complete maturity, and your ultimate capital appreciation of that over time is going to be some sort of like rate. And that's going to be like what the overarching, risk-free rate is that people are talking about. And it's just hard for me to say what that rate is. So like, if I were to say that rate was, 10% annually, then there's probably going to be a lot less spending of Bitcoin on certain things, but, I think people will be spending it, frequently on major purchases, things that do have some sort of appreciation inherent within them as well. So I think it'll be spent more on like appreciating assets probably. But if it gets big enough to where it's like still used as a complete medium of exchange, then I guess that's different. And I think that then the argument really becomes, how much are spending habits really going to be reduced in that type of an environment, and how much is the economy going to structurally change? And then that's when you get into the whole, philosophical arguments around time preference.
Yeah.
Right. Well, in sake of time preference, I know we've kept you an hour. Got just a couple like rapid fire questions that I want to throw at you, and then Bo, if you got some, and we'll wrap up here. So, how'd you come up with the name of your book, The Seventh Property, and what is the seventh property of money?
Yeah. So, when I was writing the book, really the thesis emerged as I was writing it. So I was talking about the monetary properties, and then I was saying like what makes Bitcoin distinct from all these other forms of money is that it has decentralized production, storage, and verification. And those are kind of like the three main avenues from which financial intermediaries are involved in money. And so I was like, okay, so that's what makes Bitcoin different. And then I was thinking about how to incorporate that. And then I was putting together in the first chapter this whole framework for the monetary framework. And I was like, okay, how does that fit into this? And I like couldn't figure it out. And I was like, it doesn't. And I was like, okay, well, it should, because that's a fundamental property of Bitcoin. And that's when the idea came. And I was like, okay, so there's 6 monetary properties of immutability is what I ultimately called it. And, I think that word's used a lot more frequently now. Back then, it wasn't quite as frequent. It still was frequent, obviously, but, I was like, I like saw it on Twitter one day and I was trying to think about what to call the decentralized production, storage, and verification of money. And I was just like, yeah, I mean, that's effectively, what immutability is enabled by is that. So, and I think that line of thinking is really important because when you break it down by monetary properties and you break money down by monetary properties, that's ultimately like the economic framework from which you can view money. So when you think about like what backs money, it's really just like these fundamental properties it has. And then when people talk about all these different things that Bitcoin is backed by, I think that they're really talking about things that it's like enabled by, which enable it to have a certain property. And it's like a big smorgasbord of things that ultimately enable some of these properties. So like the energy argument, for example, and I have other opinions about that, but anyways, rapid fire questions. So I wasn't planning on titling it that, but then I came up with it and then I was kind of like, and then it was like a few days later and I like, I was like, all right, seventh property. Yeah, that sounds awesome. And then that was it.
Cool.
Awesome.
Do you plan on writing another book?
Not really, to be honest. I don't know. Maybe when I wrote the book, it was very obvious to me when I made the decision to write the book, like there's a big need for something like this. So like once that void in the market was very apparent to me, I was like, okay. And I was, so if I ever get to a point later on and I'm like really frustrated about something that doesn't exist, then maybe I'll write about that. But nothing's popped up yet. But I'm not really like planning on being like an author long-term in this industry. Maybe I'll do another book, but I'm not trying to be like just an author.
Let me ask you, what would you like to build?
Yeah, so I'm currently setting up a business. It's going to be an asset management, and it's too early for me to like talk about it right now. But yeah, it's going to be asset management focused on Bitcoin.
Very cool.
Yeah.
Why Mike Tyson and Kanye? Sorry.
Ooh,
yeah.
Yeah, it's so funny how much
and are they
I love how much
clients?
people talk about it on Twitter. Honestly, how it happened was I was like, I was kind of towards the end of writing and I was like, oh, I gotta like put quotes at the beginning of chapters. That's like a thing you do. And I was like, and I always thought like quotes are so stupid. And it's like, you can make this anything. And I was like, okay, I could do this anything. I was like, who's like a really quotable person? I was like, Mike Tyson. And after that, I was like, Kanye West. So, and that's basically it. And like, honestly, but for like Mike in particular, like Kanye is obviously insane, but he says like really hilarious stuff. And, but Mike, dude, I think Mike's a really smart guy. There's a lot of things that Mike says, that I don't know. I think the dude, as much as like people like to shit on him or they think he's like stupid, I think he's pretty wise. I mean, when you think about a guy who achieved the level of success that he did from the bottom of the barrel that he came from and the amount of time, he was like literally at the top of the world, like back in the 90s. He just has a very unique take on the world. And like, he understands quite a bit about how the world works and it's apparent in his opinions. He might not say it in like, an intellectual way or whatever, but I don't know. I think there's a lot of wisdom in the stuff he says. And like my favorite one that he said was, I think I started chapter 3 with it. It was when Jesus comes back, these crazy, greasy capitalistic men are going to kill him again. And I was just like, dude, that is like, and I'm not religious, but like what he means by that, it's just like, yeah, that's like how the fucking world works. And
there's a lot of wisdom.
Yeah, smart dude.
Oh man. Well, you're going to be in Miami. I think you said that you'll be doing a book signing.
Yep. So it's going to be in the Bazaar area on Thursday. And that'll be at 11 a.m.
Is that Miami time? 11 a.m.
11 a.m. Miami time. Bazaar Thursday. I'll be like tweeting about details of it as I kind of learn more, which might be on like Wednesday or something. I don't have a ton of time. I'll just be there for like an hour. So try to get there early and I'll be trying to bust out as many of those as I can. And then I'm going to plan, I don't know yet, everything's so expensive, so I'm not going to reserve a spot, but I'm going to plan some sort of like meetup for people who are interested in the book. And we just like hang out at a bar for a little bit at some point. That will either be like probably like Thursday evening or like Saturday, I'm thinking.
Cool.
Very cool. Well, where can our listeners, where can they find more information? So you can get the book on Amazon.
Yep. Book is the seventh property. It's on Amazon. You can follow me on Twitter at Eric, ERIC, Yakes, YAKES.
Cool. I just want to say, I wish I had read your book when Zach told me to read it. It's you're convincing the hardest to convince people in traditional finance. And I've sent the Bitcoin standard to a couple different people. And if I could go back in time and send them the seventh property, I think it would get a lot further, because traditional finance people are really hard to convince. And I think your book does a great job.
Thanks, man. I really appreciate that. Yeah, I'm honestly, I didn't think it was going to have the success that it did. Like I knew it, I thought it was good, but I'd never written a book. So I was like, I have no idea how this thing's going to work out, but it'd just be good for me to like understand it. But yeah, but it's been great. I'm glad it's doing good stuff.
Cool. Absolutely.
Well, it's been well received, man. It's an excellent book. Everybody check it out. The Seventh Property. Eric Yakes, thanks so much for coming on Value Stack Podcast, man. We'll have to have you on again sometime soon.
Absolutely, dudes. Thanks for having me.
Peace.